Well, assalamu alaikum. Thank you everyone for joining. I really appreciate you guys being here and, really excited to have this conversation. I always say halal investments has really been my baby, and we'll tell you guys a little bit more about myself and then also Andrew as well, and how we work together in composing and managing our halal investments. So my name is Fahmin Fardous. I am a certified financial planner. I live in New Jersey, as you guys already know, but I do have three children. So my youngest is actually 8 months old. So I'm really in the nitty gritty. So when I'm not making a wonderful financial plan for my clients and, talking to someone about halal investments, I'm usually at the park with my kids or, trying to read a book for myself, which I can do because my kids are snatching it. So I'm usually reading to them or going for a walk. I'm trying to get up back on my pedometer to count my steps. I'll hand it over to you, Andrew.
No, thank you, Kameen. I'm Andrew Tudor. As I put in the chat, I'm coming in from Charlotte, North Carolina, originally from Cincinnati, Ohio, for any, Buckeye Bengals fans there. And I work with our institutions. And so most of my clients are nonprofit organizations or, family foundations, endowments. And really the crux of what we do is help them protect and grow those dollars and also make sure that those dollars are rowing in the same direction as the mission of the organization. So, for me and I work hand in hand, thinking about how do we make sure that we are creating portfolios that make the world a better place and align with the goals and the values of our clients.
Thanks, Andrew. And also, definitely want to tell you guys a little bit about Zenith as well. So Zenith is a fee-only firm. So I am a financial planner here, but overall, any advice we give is really we're not getting compensated on any commissions. We don't sell any products. We are a fee-only firm. So we have our investment management where if you want us to manage anything, we will handle the investments for you. But financial planning is really where we come in and give good quality financial advice to you guys.
Yeah.
So, and I kind of also go ahead, Andrew.
I was just going to say before we kick off, housekeeping things. If you have any questions, please feel free to drop them in the chat. I'll be monitoring the chat. So any questions that come across, we'll be asking and jumping in and making sure that you get what you need out of this session. Back to you.
Thanks, Andrew. So also want to tell you guys, why I do what I do, right? So I became a financial planner mostly because there wasn't really a planner for someone like myself. Even as I got out of college, I knew I wanted to invest, but there really wasn't any options for someone who didn't have $1 million. I had my background in wealth management, and I was at PNC Bank for about 12 years before coming over to Zenith. And everywhere I looked, there was a minimum. You had to have either $1 million or 500,000 or 250,000, but there wasn't an open space for someone who genuinely wanted to have halal investments, to have something aligned, but didn't necessarily want to do like go ahead and do individual stock picking. So when I came over to Zenith, I was really excited. I worked extensively with the investments team to bring this to you guys. This really is my baby, and I'm super passionate about it because I'm bringing something and we're creating something for an audience that wasn't there for me like about 10 years ago. So we're going to talk about, a few different topics, so, why it's important to invest and, what are the current halal options and how we actually also cater to you at Zenith. You want to go over
Ready to
to
dive
that
in?
slide? Yep. Ready to get started. Okay. Please feel free to drop in the chat the importance of investing. Why is it important to invest? I'll give it a few moments. Don't be shy, guys. We want this to be very interactive because, the more questions you ask, the better answers, I'll be able to provide for you guys. And then you'll definitely know that this is a collaborative process also. I don't definitely want to be just talking and, without any questions from you guys. Yes, yes, that is a great answer. That
Build a
is
more a stable future for yourself.
that is one of the key aspects. Absolutely. So we can actually thank you for that. Yes, gold based. Absolutely. We could go over to the next slide, Andrew. So, thank you for, putting in the chat why it's important, right? So we definitely want to reach our goals. We definitely want to make sure, we're creating a more stable future. But it's also about combating inflation because one of the things that our communities definitely struggle with a lot is the fact of, that scarcity mindset of where they're very afraid to invest, where sitting in cash is really the way to go because a lot of people have a really low risk tolerance where it's kind of like, if they are investing something, they're thinking about it, they're losing sleep at night. And it's a lot of times because people are not necessarily investing according to how they feel and their risk tolerance, which we will talk a little bit over later on as well. But combating inflation is one thing because if you're having your money sitting in cash and it's not growing, you're actually losing money because what you can buy with $10 today is not something, 5 years ago you bought a lot more for that same $10. So definitely, you want to reach your financial goals, whatever that may be. If it's college, if it's saving for retirement, if it's buying a house, and then also making sure you're being tax savvy, right? You're saving the right way to make sure you're not necessarily getting taxed on where you shouldn't be. And then a lot of the things that we necessarily didn't have is having generational wealth, and this is something we want to build for our communities because before, the rich already knew all the tricks, right? They had all the tricks up their sleeve. But what about us? What about the people who, come from blue collar families who have worked really hard and want to make smart and impactful decisions right now and want to build a stable future for themselves, but also leave behind a legacy? So these are, one of the top reasons why investing is important. And I love sharing this slide because this is a really great visual in terms of like why investing is important and why time is your best friend. So here we have Fatima, who is 25 years old, and Fatima's line is the green line, and Ali is 40 and his line is the blue line. So you can see that Fatima started at 25, but she only put in $10,000 every single year, and she waited until, 40 until retirement. 40 is a great age to retire. I don't know if that's really ideal, but she started early, so maybe Fatima could. But then Ali is like, I'm gonna pay my bills, I'm gonna pay off my loans, I'm gonna wait, until life gets a little bit better, and then at 40, I'm gonna start investing. And you can see that he put in twice the amount as Fatima did. So he did 20,000 a year, but he did it for, 25 years, right? But then Fatima did it for more. So, and you can see she had 2.2 versus he had 1.1. And they both had the same amount of return on average, about 10%. But this goes to show where it's not necessarily waiting till the time is right. Even if you can't necessarily do a whole lot, the most important step is to really get started, and you want to be consistent and you want to stay consistent, and it's not necessarily getting scared of the noise because there's a lot of noise out there, especially right now. There's, so many different information, and right now with social media there's a lot of jargon out there as well, and it's kind of like, what is the actual advice? And this is why it's really important to really do your due diligence, work with a professional instead of someone like, hey, I paid off my student loans like 40,000 and now I can help you do it too. And now you found them on Instagram. And it's like, but are they, I mean, they could do it, but you need to also look at your overall financial picture because it's not just anything in one silo. You have to look at it overall. Like, yes, I've had many times I've had people come across to me and say, hey, I have 50,000 saved, I have 20,000 saved, and can I do halal investments with you? And the first question I ask them is this your emergency fund? Is this all the cash you have? And they're like, yeah, this is the only cash I have, and I'm not doing anything right now. And it's a single income household, and I'm the one paying all the bills. I'm like, well, we definitely need an emergency fund because if you're going to invest something and we're not necessarily looking at your overall time horizon and you need it in the next year or two, it doesn't make sense to invest it because there's a lot of ups and downs and swings, and we'll get into that a little bit more later as well.
Yeah. I just want to say I love this slide. I was just doing the math that Ali, 25 years with 20K per year, he puts in $500,000. And Fatima with 40 years at 10,000, she puts in $400,000. So she actually contributes less to the account, but starts earlier and ends up with twice as much money. So just
Exactly.
it just really does show how starting early pays off.
Yeah, and time is your best friend.
Definitely.
So now,
Okay.
we understand what are why investing is important, right? And why time is your best friend. But it's also understand like what are the current halal investing options, because that's really the key here, and that's really been the challenge. So I definitely, want to take a pause here. If anyone, wants to drop in the chat, like what do you know? What do you know about halal options? What is out there right now, before I get into it?
We have a question here. What are the biggest misconceptions about halal investing or Muslim investing?
The biggest misconception is the fact that people believe you everything 100% of all of your investments has to be halal. And it's very different when you're investing in the stock market versus like, when you're necessarily doing a business. So I'll actually share. So one of the halal options you have right now, I'm not sure if you guys know about it. If you don't, feel free to jot it down. It's Wahid is one of the ones that offers an ETF. It's basically ETF is a exchange traded fund, so it's basically a whole bunch of stocks pulled together and then they're invested for you. It trades like a stock basically, but you have like very minimal shares in different sorts of companies like whether it's a Google or a Meta or an Apple or of course the now Nvidia is everywhere. So Wahid is one of them. The ticker for that is HLAL, and they're basically the halal S&P 500. So they've taken out all the haram. Most of the companies, obviously the ones that are problematic, any of the financial companies, and 70% of it is aligned. And that actually is where the minimum needs to be. Of course, 100% is great, but us being in the States right now, and India is not a Muslim country. So according to a lot of the Sharia boards, it doesn't have to be 100% in order for it to be compliant. It has to be at least 70%. And there's different screens in terms of how it can be halal. And there's two screens it definitely has to pass. And I'll go into that a little bit later. So there's Wahid for ETFs, and then there's also Amana funds. They also have growth options overall. So you can, they're very similar to the S&P 500 as well. And they have a halal option as well.
Great.
This slide is awesome, but I know it can be very overwhelming. So happy to take this down. But I'm sure you guys are noticing like this blue box, right? That's this arrow, like the lines are kind of joining each other. So basically, what that portfolio is showing is that's a balanced portfolio. So it's a 60/40. What that means is it's not 100% in equities. It's about 60% in equities, which is in stocks, and then about 40% in fixed income. So this is just like, it's a basically like an example slide. This is not necessarily a recommendation of a halal investment, but just so people understand, talking about risk tolerance. So one thing I
Yeah.
had mentioned, go ahead, Andrew.
I was just going to say, we talked about the diversification in here and how it can be easy to choose, one index or be in one section. And, depending on the year, as you can see in a lot of these charts, depending on the year, right, we really don't know going into a year which section or which geography will do the best. And so when we think about, diversification, whether it be normal investing, or when we think about halal investing, it's really important that we have different asset classes and different geographies in the portfolio. And so I know we talked about how to make sure that we can keep it compliant and also make sure that it's balanced, so that people know going forward that it's not too risky of a portfolio for them, as we kind of build for their financial futures.
Yeah, absolutely. And this is where I also talk about risk tolerance as well. So the way we want to look at risk tolerance is it's on a scale of 1 to 100. So one is like, please give me all my cash. I want to put it under my mattress. I don't want to invest anything. And then 100 is like, I'm sure we have like the crypto lovers here who are like, I am okay with the ups and downs and the swings, like, and it doesn't bother me at all. So these are very drastic, differences, right? So 1 to 100, but many people might not know the S&P 500 actually has a risk score of about 74 or so. So people that say, I'm just investing in the S&P 500, you tend, and if you're not looking at it all the time, you do tend to have a little bit of a higher risk tolerance. But the people who are investing and are looking at it every single day and are like, oh my God, yes, I made money today. Oh no, I lost it. These are people probably have a little bit of a less risk tolerance. So the 60/40 is kind of like that 50-ish type of um risk tolerance where you're kind of like, I'm okay with taking risk, but I'm not okay with risking so much. I don't want to risk everything. But this is where we also want to talk about goals, because if you need something in 30 years, you don't necessarily want to be in a balanced portfolio, right? Because you're going to kind of leave some returns on the table. But if you need it in the next 5 years, 7 years, we want to be a little bit more balanced overall. And that's where you can see this balanced portfolio is not necessarily the highest, but it does have its ebbs and flows, but there's a lot of consistency overall. So it's not the highest, it's also not the lowest, but it does give you a little bit more. And then even like for example in 2025, you can actually see that the balanced portfolio is doing better than the S&P 500, because that's in the overall it's all in the domestic market, and the volatility in the domestic market right now has been very, very volatile overall, right? So the balanced portfolio, what that means is it has diversification. So it's not all large in the largest companies in the country. It does have some smaller companies, it does have some mid-cap companies, it does have international exposure. And this is what we're talking about, that diversification. It's not just having it all in one market overall. Okay. So here I love this because it's like, what is our approach, right? How do we think about halal investments in general? So, of course, what we do is we use the Zoya for our screening. So Zoya is an app where you can actually put in like the ticker and you can see if stock is compliant or not. And compliant, what they do to measure compliancy is making sure not more than 30% of their revenue is coming in from interest. So whatever revenue they have coming in, it's not necessarily coming in from bonds or sale whatsoever. And then also they don't have a lot of debt. So these are companies that are not necessarily paying more than 30% of their market cap overall towards debt repayments. Because, and that's another thing that the Islamic approach looks at is a company that has a lot of debt or is paying a lot of interest is might not be necessarily the most financially stable, especially when it comes to volatility. So we want to look at these companies that are staying compliant overall. So what we do is monitor it on a quarterly basis. And this is the hardest part about halal investments. Like you could necessarily, just pick like 10 stocks, right? But you checking it every single, like even every 3 months, it gets a little bit tasking. But what we do is, I mean, this is our job. We do this on a day-to-day basis, right? We're making sure that it's screened properly. So we make sure that, your individual stocks, your overall portfolio is invested appropriately, and then doing that screening for you. We're doing that business screen, we're doing that financial screen, we're checking it quarterly to make sure it's compliant. And if it's not, we're putting it on a watch list. And if it still doesn't come back up, then we're getting rid of it and making and replacing it with something else. But that's something that we're doing on the background. Do we have a question come through?
Yes, we do. We've got a question here. Since riba is prohibited, how do halal investment funds handle bonds or fixed income products?
That's a really good question. So there's bonds and fixed income is not necessarily something that can be done in the States. So anytime a portfolio has less risk in general, so now we have to substitute it with that fixed income, right? But that's also kind of like a controversial um, vocabulary to say, because fixed income is a little bit is not necessarily allowed in the Islamic principles, where you can't have fixed income because you cannot make money on money. So Riba is interest. So when you lend someone money, you're saying that I am going to get a certain percentage back based on what the amount I give you. But then also same thing with the fixed income portion. That's the bond where you're like the debt holder, right? So we have to go international with the Sukuk bonds. The Sukuk bonds are really mostly in the Asian space, so in the Middle East and the Far East, where they have banks that are Muslim and Islamic banks where you're kind of like going in on a profit share basis, very similar to like, hey, if we're you're not going to lose your money, but as the banks make money, they'll give you a certain percentage back from it. And it might be like 10%, one quarter, but it might be 3% another quarter. So you're not necessarily making money on money, but you're risking the business model with them, but you're not going to lose your principal, which is where it's not the same as investing in a stock. So we have to go international. Unfortunately, right now we don't really have anything that's going to give you the fixed income. But what we are looking in terms of like the to offset the volatility is owning gold, because precious metals are a really great way to hedge risk. And what we have to do is we have to make sure these are companies that are having like physical gold where you have ownership of it, instead of like just this cloud-based type of gold ownership that doesn't necessarily exist.
Great question.
Yeah,
Great
really
question.
great question. So one of the things we've noticed in our process, and as I was working extensively with our team, is the ETFs that are out there, whether it's the Amana funds or the Wahed funds, they are mostly in large cap. So large cap is like, these companies that have more than, these 100 billion in their market cap. But so these are these really large companies overall, but then there's no mid cap exposure. What about like I'm sorry, I said 100 cap, I meant 10 billion. So the mid cap is the $2 to $10 billion industry where these companies are big, but they're not necessarily the biggest. There's no exposure in mid cap. There's no exposure in necessarily international. There's not a lot of exposure in the small cap either. So what we do is we actually cater and curate a portfolio where we're bringing in the Wahed, the Amana investments, but then we're also bringing in that mid cap exposure from the individual stock holdings. We're doing that quarterly screening for you, and we are making sure it's staying compliant, and then making sure it's also allocated appropriately to your portfolio, not taking too much risk than it needs to, and then going ahead and making sure it's staying compliant. And depending on what your goal is, whether it's 100% in equities or whether it's 50% in equities, we're doing that ongoing research for you to make sure it's
Right.
staying compliant. And that really is the hardest part, is staying on top of it. So if you've got a lot of time and you're really excited after this conversation, you can definitely go start, using Zoya to start doing your own research. But if you're like, no, I'm just gonna buy HLAL and call it a day, you can do that too. But this space is really to, bring awareness to why investing is important and just to really get started.
Yeah, we got a question in the chat. With so many companies profiting off of weapons, drug, alcohol sales, is this another area that Zoya addresses?
Yeah, actually, Zoya does address that. So they'll mention how they're making their money. So, if you have the membership, they'll break down. But another way what we can do is we actually can screen for companies that have involvement in the masses like that, and then we can actually exclude them out of your portfolio. And but those, I have to be honest, in the sense that those portfolios have to be a little bit more risky. And by what I mean by that is you have to have a higher risk tolerance for those type of companies where we can do that individual holding and asset allocation for you. But Zoya definitely does do that screening. And honestly, if it
Right.
has like a Boeing, for example, will never come up as compliant in Zoya because their business model itself is in the weapons. So it's not necessarily gonna come up as compliant. So it has to be the business model has to make sense. Like you're never gonna see a compliant like Heineke there, even if they have all the screens right.
Got it. So they already screen out drug use, alcohol, weaponry from the initial fund.
Yes, yes. You have to
Right.
pass that initial business and then go into like the business screen and the financial screen.
Correct. Great question.
Um, so in terms of like, and now you're like, okay, this is great. I want to get started, or I want to have a conversation, but what kind of accounts can I really open? So it really depends. There's really different ways where we can go about opening the accounts in general, but there we can manage like a solo 401k. If you're a self-employed person, we can do that IRA for you. You can do a brokerage, you can do a Roth, you can do a traditional, you can even do a trust. But it's really like all the accounts that are available to you that can get invested, you can use halal investments in it. Anything that you can allocate with the stock market, you can use halal investments in. Like, but another question that people ask a lot is what about their employer 401k? Because a lot of times, like, you only have the options that they give you to choose from. So that is a challenge. So that's something where we have to like go in and find like the most halal in terms of like the options that's given to you, because unfortunately you can't go and create something and choose something that's not available, but you can reach out to your HR team, which I've had people do, and they ask for at least the amount of funds. A lot of times employers are willing to add the amount of funds which are halal into your 401k option, so at least you can make sure your 401k is staying halal. But
Okay.
it's another thing is, sometimes that, okay, I definitely didn't have that, but I am no longer in that company, and now that 401k is just sitting there, you can definitely do a rollover IRA. And that's where once you do a rollover IRA, now you have the options to be able to choose your investments, because now the whole array opens up for you because you're not limited to what the employer was offering you.
Right.
Okay. So how do you make sure you're maximizing your returns? You want to make sure you're finding the right amount of risk for you, right? So that risk tolerance, are you 50, are you 1, are you 100? Making sure you're finding that balance there, making sure you keep on investing, staying consistent. You want to make sure you're diversifying and rebalancing, because you could buy something today, but then there's ups and downs and swings. So you have to make sure your allocation is right and you don't have so much of an overweight, whether it's international, whether it's domestic, making sure it's aligned appropriately. And then just think about your goals. Don't, tune out the noise. So the way I like to think about it and tell my clients is, a lot of times we have our clients like, hey, what are you guys doing? Yeah, we are making changes to your portfolios as there's changes and shifts in the current market. But we also look at like, when do you need the money? If you need it in 30 years, we want to make sure we're staying active, but you don't necessarily need to pull from it. So it's also kind of thinking about your overall goals, like what is this money earmarked for? And that is the biggest challenge people have when it comes to investing, is understanding like, what am I saving for and when do I need it, and not necessarily get scared and pull the monies. Because a lot of times what people do is, oh, I'm throwing spaghetti on the wall. Markets are looking amazing, so I can buy whatever. And then they buy high. And when things start to shift, they pull out, and then they're selling low. And then they're like, oh my God, I've lost so much money in the stock market. Now, I hate investing.
I agree. I agree. So finding the right amount of risk, staying invested and not being afraid. Uh, I heard you say not getting overly confident as well in the good times, diversifying rebounds, and then staying long term.
Absolutely. Absolutely.
Well, that's amazing. And as we think about, halal investing and we think about, the team here, if there are any questions, please, we'd love to hear them in the chat. As you heard from me speak about, we take pride in working with, you know, helping people to achieve their financial goals and also making sure that it's in concert with the values that they have. So if you'd love to join us and have a conversation, we'd love to have you have a conversation and reach out. And then with that, for me, anything you want to add before we jump into questions?
No, I mean exactly what you said, Andrew, and one of the reasons Zenith was founded, right, is because, we're bringing advice to people that don't necessarily have access to it. So if you're someone who is like, I was looking for someone, but I didn't know really who to go to, where is a professional because I'm not necessarily rich or I don't come from that generational wealth. I mean, we're those people because we all have a background in finance, but we also don't come from money as well. So we know what it's like, and we're creating solutions that we wish we had ourselves. So would love to have conversations with you, and please feel free to think of us as a resource, especially myself as well, because I struggle to find someone Muslim to talk to about investments or just understanding, and I didn't have someone. So I'm hoping to at least, be a resource for you guys as you guys think about investing, finances, anything in general. Just please think of me as a resource, and then, reach out if you guys have any questions. And, feel free to take the financial fitness quiz just to see where you guys are and how you're feeling. And it's really fun to do. It takes like a few minutes.
Awesome. Well, we've been asking some questions along the way. Thank you, everybody, for participating. But we'll open it up now for additional questions and things you might want to know when it comes to investing, planning, halal investing in general. Okay. How should halal investors think about risk management, especially with some of the daunting headlines?
Oh,
You-
that's a really good question. So, what we want to make sure is you're having your emergency cash. Before even, thinking about investments in general, you have to make sure and think about like, these are volatile times, right? So, what if you were to lose your job or whether you're a business owner, right? Do you have enough cash to fall back on? Because that's really important to make sure, your bills are getting paid. So you're not necessarily ending up in a situation where now you don't have the cash and now you're having to maybe sell your investments or pull from your retirement where it's not necessarily the best ideal situation, right? Because you're selling at a time where now markets necessarily aren't doing so well. And now once that gets depleted, what do? You're swiping credit cards and going into like predatory lending. So making sure you're building up your cash reserve, your emergency cash reserve is really key, and then having conversations about starting to invest and at least staying being consistent with that. And of course, if you have a
Agree.
daunting question, anything that's on your mind, feel free to reach out. That's why we're here.
I agree. What she said. Okay, any more questions before we wrap? Wonderful to have people join us today, and we'll be releasing the recording as well. So if you want to catch it and share it, that would be amazing. And just like Amin said, take out your phone, scan the fitness quiz, take it. It's really a great way to see where you stand and what gaps we might need to help either in education or putting together a financial plan for you. Okay.
How does
Well, with
Zenith approach?
I was gonna say, with no new questions, Kameen, I'll let you take us out.
Well, we can actually have a last minute question coming in, right? So, how does Zenith approach students interested in investing that are not necessarily from a wealthy background? Well,
Mm.
that's exactly what we do, right? We're not necessarily catering to people who come from a wealthy background because they know what they have to do, right? They know what are the choices they have to make. So, we know we're definitely open to having a conversation with you. Like the first conversation is always complimentary. So before we go ahead and give any kind of advice, we want to understand your full picture overall. But if you're a student, that doesn't mean we're not going to talk to you. We certainly will talk to you, especially, I mean, we work with many students who are interested in investing, but also they have like student loans to pay off, and then they've got goals, right, depending on where you are in life. So we definitely will address and have that conversation with you, and you can certainly become a client if you want us to manage your investments for you. So whether as long as you're not 5 years old, right, as long as you're an adult, you can definitely have a conversation with us.
Yeah. And the one thing I'll add, and spending a lot of time working with, folks at the beginning of their careers or starting their careers, it's really about your habits. And so, trying not to focus necessarily on the dollar amount as we start, but really making sure we're nailing our habits of saving well, about watching our spending, about making good financial decisions, about watching our debt load. And as small as we can, we saw the Fatima versus Ali scenario, but as much as we can, even the small amounts turn into mighty amounts. And so making sure that we're investing what we can as we go along and putting ourselves in good situations as we get to mid-career and late career stages.
Absolutely. And, for students, it's a great time to get started because, you're still young and you've got time on your side. So even if you can't do anything large, just stay consistent and just keep on adding as life gets um more and more busy, but not necessarily getting into like that lifestyle creep where now I'm making more and so I have to spend more, but staying consistent, but just making sure you're being aware of your overall finances. Yes, yes. Small amounts turn into mighty amounts. That is awesome. I think I'm gonna steal that, Andrew.
You got it. You got it. That was all yours. Well, thank you, everybody. We really appreciate you spending time with us. Any questions on the follow up? Reach out to us. Reach out to Famine, and we'd love to be able to help you be a resource as you chase your financial dreams. So, with that being said, thanks for joining us, and we'll catch you next time.